Bala, CEO at Aditya Birla Sun Life AMC in the studio right here with us. Bala, morning. Good to have you in the studios with us. The last time we were talking, the sentiment was a lot worse. Things looking up finally?
Yeah, I think last 2-3 months, the sentiment has been improving on the back of one, the credit market has been showing some kind of uplift. And since the time, I think the IBC resolution process that came more in favor of SR, I think that boosted the confidence of the financial market in general, that the resolution process for some of the pending issues can actually get hastened up.
And will favor the creditors.
Will favor creditors. So that actually gave a lot more clarity from the banking system point of view. I think if you look at the last 1 month, the sector that has outperformed the market and done the best is actually banking and financial service sectors, just because of one clarity that came in. Secondly, there was a lot of apprehension about finding a resolution for financial service sectors. I think in Parliament passed a resolution that they will apply the same principle as an IBC for finding a resolution for NBFCs. Also, I think has boosted the confidence of the market. So in general, the sentiment has improved as a result of that. And then third, which I think in my view has helped actually the whole financial market, is this, some of the credit resolution, which of course was pending for last, say, 6-7 months. I think as it happened in the case of the Z Telefilms, the resolution that happened very recently. Then again, that means that I think the overall pain levels are getting reduced. Some resolution is coming. People are getting back their money, and that's the way I think.
Have you got the money back from the SL group?
Yes, we got back finally. Through the sale of shares, we got back close to about 850 crores of outstanding money.
So what happens to you? What happens to the funds where SL group exposure was there?
Yeah, we had two exposures. One, of course, to the loan against shares. The second is the road assets, where the road asset that has got receivables in the form of toll receivables, second in the form of annuity receivables, and both of them, of course, had part of that, and that we segregated to a separate account in order to have more time to find a resolution on that, which is roughly about 780 crores. As far as the loan against shares concerns, we got about 840 crores. As a result of that recipient of money, the overall NAV on the day that we got the money into a credit in our account, the NAV moved up close to about 1.5%, 1.2% roughly in some other schemes. In some other schemes, went up about 0.8%.
These are debt funds.
These are debt funds, yes.
So debt fund NAVs have gone up by 1% to about 0.8%.
Yes, of course, it also fell previously because of mark-to-market valuation, so that got corrected back. Okay. So one of the things, of course, I'm also a firm believer that fixed income market, though a lot of people are getting worried and about the credit downgrades and loss of value. But I always keep saying actually the loss in value in fixed income is actually in the loss in the income. So you have two components, which is the income component, you have a mark-to-market component, you have interest rate fluctuation component, then you have default component. Default component as overall proportion of the portfolio is always minuscule of the overall percentage of the portfolio. Therefore, actually the eventual loss doesn't happen. But of course, one day loss you can never avoid.
But is the lumpy money, Bala, coming back to mutual funds? Because it's that which has completely tightened their purse strings.
No, lumpy money as far as the fixed income concerns, I think HNIs, the institutional investors, retail investors, HNI of course track the portfolio very closely, and they don't have much appetite for volatility. I think biggest change that has happened from investors' behavior point of view, people are willing to accept the volatility that comes in the equity market, and they think actually is a part and parcel of the life as far as the equity investing concern. The same volatility, however small or big, comes in the fixed income. The general tolerance level is low.
So that money has not come back.
That money has not come back. I think money, of course, come back into the other schemes where the volatility will be less and focus more on high quality, and the uncertainty is low due to various downgrades, expectations, etc.
Equity focused?
No, these are all I'm talking about fixed income focus. As far as equity is concerned, there's not been much money coming in, except the SIPs has been maintained in the industry, close to about 8,000 crores of inflow that comes in. But at the same time, as the market showing a progress in terms of improvement, we have seen some redemptions in some of the schemes. But I think net the industry is getting flows. Though the rate of growth has come down, there is no doubt. But the industry continues to see flows actually.
Okay. Are you expecting earnings to catch up, Bala? Because while there may be relief and sentiment that's bettered, a lot of the company commentary has still said that perhaps revival is even a year away. So what will happen then if, like, down a couple of quarters or so, we're not really seeing that reflection in earnings?
I think right now what's happened is the confidence of the outcome that is coming from the government is improved because they are listening to the market, they are listening to various players, they are looking at various options of driving the economic growth, including carrying out some of the structural reforms as late as yesterday's about the labor reforms, all of them actually pointing towards the government is quite serious about now building the economy back to the next level of growth. Having said that, earnings is a function of demand-supply situations improving. So while supply side, of course, remains good, but demand side is still not shown big progress. I would assume the demand side will pick up, one, thanks to the good monsoon that we have seen this year. I think the Jan crop, I think, should be, in my view, should be the best the last so many number of years. That could, I think, boost the confidence. And second is various steps that the government has been taking in terms of the keeping the interest rates low. There is a high probability where the interest rates are, where the growth is about 5.5%. There is high probability the Reserve Bank of India will continue to keep the low interest rate regime by cutting the rates further. But ultimately, it will have to translate into transmission of rate and therefore improve the earnings of the companies. I think it's a function of time.
What's interesting today, and Bala, I'm just going to take a side detour to talk about the market trajectory. It's a day one of a new series. The series gone by was a strong series. We had strong rollovers. And when you have strong rollovers and when markets are going higher, which means that if I have a long position, I'm ready to roll over my long position, which means I expect that if November was good, December will be equally better. So that's the underlying thought in the market. And when it comes to sentiment, sentiment is something which can change with the drop of a hat. It was gloom, doom, gloom and doom in the month of September and early October. Now what do we have? We do have stocks which are in oversold zone, overbought zone, and as of now, nobody is really reacting or acting to all the bearish narrative in the economy. Bala, sensible investing is that you take a reasonable view of the economy, you preempt where the bad news is, and you preempt where the good news is. The bad news is that markets have run up, and it's only because of liquidity. There is no good news so far in the economy. So do you think somewhere markets are running ahead of themselves?
Yeah, as it always happens, the market discounts the potential actual outcome. So almost about 6 to 8 months before, even almost about a year before. And I think if you look at the last 6 months of behavior, then there was a time where the disbelief was very high and people felt that the government is not taking any action and the economy is slowing down and the credit market improvement is being seen, and that I think continued for some times. I think the last 4 or 5 months, I think we are seeing that reversal of that. I think some action is coming. The economic growth, I think, will not come back as fast as people are expecting. I think it takes a lot of time. Therefore, the market is actually discounting purely on the basis of what could come, say, next down the line year or so. Secondly, even the global market. I think suddenly you are seeing global money is coming in. The global markets have been actually struggling in terms of valuations. And again, the same growth that we have concern for India, that's equally applicable to the global market as well. Therefore, I think India seems to be the recipient of some of the money, which otherwise would have gone to some other emerging market. I think the combination of these two, for the market point of view, yes, market always reacts ahead of time. And what we are seeing today is purely some kind of hope and optimism that gets built up purely on the basis of revival of the economic growth through the action which the government of India has given. It's like single tax, the tax structure is being brought down. It's actually the one such things which has boosted the confidence. Secondly, even now also there is expectation that direct tax for the individuals will be cut further to boost the economic growth. I think that such expectations also keeping the market high.
Right. Bala, what's the texture of money which is flowing into equities? And is it taking concentrated bets by maybe individual banking funds? And I'm not just talking about your fund, across the industry, or sticking with the large caps, or finally you think that confidence is coming back to actually put money into small and mid caps as well?
I think the confidence on rather the conviction on buying into the mid and small cap is of course gradually is coming back. Because people are not jumping and buying saying now is the sector to invest. At the same time, because the money is coming into the ETF form and index forms, that's holding actually some of the large cap performance pretty high. So that's why I think you'll see the portfolios or maybe the index. So more concentrated, still about 7-8 stocks drive the market sentiment, which will always be the case till such time. I think we'll see a significant improvement coming on the sentiment as well as significant expectations improvement on the earnings of the companies, which seems to be now coming in the next nifty companies and then further down. Maybe as we see the momentum picking up and shift towards the smaller mid-cap companies, at the same time as we see actually the large cap companies have reached out in terms of valuation, I think time will come. It's not that everything will continue to perform continuously year after year without any substantial improvement in earnings. I think that time will come where people take a pass on some of the names and then start looking at names below the next Nifty 50 or maybe go further down. That I think will have to come combined with some improvement on the interest rate transmission as well as on earnings improvement, a marginal uptick on the earnings improvement.
Bala, why will the economy recover? I mean, for economy to recover, you need demand to come back. For demand to come back, either you need consumption to remain strong or capex has to start. You represent a corporate group. You understand it more than me that corporates are not very excited about the current environment or the risk, or they don't want to take the risk. So why do you think tomorrow will be better than today? Why do you think tomorrow will not be worse than today?
I think the way we see is, I think what we have been running for the last 15-20 years, purely driven by investment-led demand. While that is one of the driver of the economic growth, but not necessarily that will be the only driver actually to drive the economic growth. And second is what we have seen so far. I think most of the development in India happened only through the domestic industrialists or conglomerates putting actually the plant or looking at expanding their own capacity to build their growth. And second, of course, the public sector and government have been the biggest investors in the country. But having seen that, we are not seeing major investment coming from outside the country. I think the recent measure that the government of India has taken, giving 15% tax, corporate tax, for companies who are setting up a plant in India, manufacturing unit, before 2023, they will get for perpetuity 15% tax rates. It's one of the most attractive incentives that they are given for any manufacturing companies to set up in India. I think there's a big opportunity for global companies to set up in India. Therefore, my assumption is the next 2 years, you'll see many companies coming from overseas, looking at India as investment destination, setting up a manufacturing unit in India, and make this India as a base, not just for meeting the Indian demand, even the global demand. And I think that change, I think if it happens, definitely I think will happen. We'll probably see the growth coming back. The second part is, I think rural theme in India is so powerful. One or two good monsoon, good agriculture output, income in the hands of people at the ground level can boost the consumption big time. And it may not reflect on GDP growth number, it can reflect on companies' sales numbers and then even the economic growth numbers. So therefore, that's something which we can never underestimate the power of rural economy in India.
Sectorally, Bala, what's the preference? And would it continue to be banks purely because of the factors we've just talked about?
I think banking will remain. I always consider banking as the barometer of the Indian economy.
Yeah, but will it go beyond HDFC Bank and ICICI Bank?
I think we'll probably spread. I think one of the good things that is happening is among the public sector banks, the consolidation exercise is now underway. I think as the consolidation happens, then probably they'll start working towards that consolidation has to give us some kind of benefit of synergy benefit, and also the efficiency benefit should come in. As that starts coming in, I think some of the public sectors start behaving like a private sector due to the leadership change, and also the government push actually for them to get better, ultimately has to result in valuations. Today, if you look at private sectors are trading at about 4.5 5 times price to book multiples, or maybe even higher. And some of these public sectors have got a similar kind of network across the country, except maybe the operating style could be different from a private sector companies. And such kind of companies are trading at about 1 time price to book. I think somewhere it has to get corrected. Therefore, that what we are seeing actually more concentrated drive actually in some of these names will probably spread towards other names.
Where's the potential for the biggest bounce back, let's say? You know, from a beaten down name or sector, where's the potential you see for the biggest recovery?
I think biggest recovery of one, of course, can come in the capital goods sectors.
Okay.
It's been beaten on quite badly, and some of the sectors which actually serve the nation, like power sectors and power transmission companies, and these are some of the sectors which has been beaten very badly for the last so many number of years, and they have hard assets. And so far, the Indian economy and market has not been valuing hard asset companies and providing greater valuations. I think as we start seeing things improving, we'll see the companies which have got hard assets probably start getting their right prices.
You know, banks are making a comeback. Cafe Coffee Day has just been bobbing up and down here. Let's look at the 1 month chart here, and then you will see a dump up, then a dip. So just one of those stocks I thought it's worth mentioning. Aurobindo Pharma stabilized. So the beaten down underperformers are making a comeback. Let me identify that as a theme. Bala, would you buy telecom? Or it's a no-no right now?
I think telecom is something which we cannot ignore it, given the fact that